Well, hey everyone, welcome to the Buffett and Beyond Saturday Stock Market Recap, and this is February 7th, 2026. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market had a terrible week right up until Friday when it staged a great rally. Now, all we have to do is wait and see what kind of follow-through, if any, can be sustained this coming week. And don't forget, it's Super Bowl Sunday, and we'll see if the Super Bowl indicator can hold true. In our weekly stock analysis video, well, Advanced Drainage has been coming on strong with its water management systems that are needed more and more each year. And folks, this company is not only involved in homes, it's involved with towns, it's involved with the AI build out. So yeah, it's got a lot going for it. In our ETF video, well, number 3, number 4, number 5, let's go over those home building ETFs. And when I talk about the numbers, I'm talking about the list of year-to-date ETFs. And all of a sudden, here come the home building and the home construction ETFs. And our 7-year track record is really fantastic. So we're going to show that on a compounded basis. And after a 2-year price appreciation hiatus, yeah, these ETFs are near the top of the ETF scoreboard for the year. So they haven't been very good over the past 2 years, but all of a sudden they're starting to take off, folks. And let us look at the S&P 500, and we are looking at the volatility bands, the green bands down here and the green one up there, which is not quite shown all the way. But down here, the market closed on Thursday below that band. There it is right there. Closed there, and then all of a sudden today, it just took off. Is that reminiscent of right back in here? It closed below that band, and the next day it gapped up and then just took off almost and did go to the 20-day moving average, but did not close there. Now over here, we're at the 50-day moving average, which is this blue line right in here, and the 20-day moving average is right up here in this. I'm recording this just before the market close, and it may hit that yet because it's right at the top of its daily run in here. And down here, is this indicator starting to turn around? Well, maybe. We'd like to see that. Let's go to another stochastic indicator, or another indicator. This is the stochastic indicator, and look what happened. It is right at this level where it was last time. It fell down drastically, and then all of a sudden turned around, and we had a nice 5-day rally out of it before it went right back down to this point again, closing below that band and now coming right back up. So we'll see if this can hold in here, because this indicator has certainly flattened out, and it takes a big rally in order to flatten out this longer term indicator. And when we look at the QQQs, what had us worried yesterday was the volume. You see these red vertical lines down here? That represents the volume when this market or this particular ETF is down. Again, the QQQs are the NASDAQ 100 stocks. And it fell below the band, just like it closed 2 days below that band. Of course, again, this is the volatility band, this green line in here. And we can see 2 days below it, and volume was picking up. That had us very worried. But then all of a sudden, it gapped up this morning, where I'm talking about Friday morning, and now it's at the top of its run right now. And as I mentioned, it's before the market closes, so we don't have a good read on this volume yet. But it looks pretty good. We can't see this market turning around and going down in the next hour or two. And when we look at the SPYs, the SPY is 689. It's only 2 points below where we had this last week. So the SPY, which is 1/10 of the S&P 500, is doing pretty well right in here, only 2 points below where it was last week when we recorded this. Now let's go to the QQQs. The QQQs were 621 last time, so we're looking at 13 points lower. Well, what does that mean? That means that so much of the damage was done right in the tech sector and the semiconductors, and more in the tech sector, and we show that in our ETF video, where the tech really is sitting at the bottom of this yearly returns of the ETFs. So it's sitting at the bottom of the group that we follow, but it seems to be coming back strong. So we'll just have to see how that volume is and what happens on Monday and Tuesday, folks. So yeah, we had an unbelievable week this week. Very, very scary. It always is, but the market seems to be coming back, and we'll see where the rotation goes, because I looked at some of the individual stocks in the tech sector, and some of them are up 7-8% today alone. But then we have Amazon that is down about 5% as I'm recording this. So people don't like what Amazon did, and we'll read more about it over the weekend or later today after the market closes, and we'll find out exactly what's going on with Amazon. But there's a lot of those stocks that are up, a lot of those stocks that are down. So it's been a crazy, crazy week. But we'll look at the home builders, and that's what's going to be exciting about the ETF letter this weekend. So, folks, you go out, you take it easy. Most of all, be safe, and we'll see you right back here in a couple of days. And always remember, if you want to live on this beach and watch the sunrise like Jimmy Buffett once did, then you've got to learn how to invest even better than Warren Buffett does now.